Okay, I'm Dennis Hudson at orangequant.com, and this is a SPY forecast update. Today is Wednesday, April 14, 2010. It's after the market close, and everybody, at least quantitative analysts like myself, technical analysts, and lots of other people, other retail traders, we're all standing around with our thumb in our ear trying to figure out if and when the SPY or these S&P is going to capitulate finally. So that's what this update is all about. And as soon as this logo goes away, by the way, I put this up about train wreck here. That's my street cred. This was my forecast way back in June of 07. And you can still get a free download of it. I haven't modified it at all. It's something that's troubling to me that's going on in the media. If you haven't noticed, it's very sly and subtle. They say that the crash started in the fall of 08, and that's utter crap. Go look at a chart. The crash started in the fall of 07. I don't know what they're trying to pull out there, but it's specious. Alright, anyway, let's get on with the forecast. And first let's look in on the VIX weekly chart. And I just want to point something out about the VIX. And that is, it's almost at its 3-year low. If you'll notice right here, I'm going to draw a yellow line across there. See, going back there, all the way back, right to there. That's about July of 07. Now, as I've said before, the VIX, in my opinion, is a lagging indicator, but it is interesting to look at. And what we see here is that see that kind of gold line going over that, down over that blue line? That's suggesting that the VIX is going to continue to go down because that's the 50-day moving average crossing down over the 200. And down below, the MACD is indicating something similar. You can't quite see it, but it's also suggesting that the VIX is going to drop some more. The only thing that's kind of interesting, and I'm going to circle it up here, is the standard 14-period RSI up at the top. And you can't see the numbers, but that's about a 38 point something, which suggests it's reaching a turning point there to go back up. So who knows with the VIX? It's a lagging indicator, but I think what's important in this chart is that it's approaching a 3-year low all the way back to July of 07. And it would be easy for it to break down through that level a bit more, and that's going to play into the rest of this forecast somewhat. Now here's the SPY weekly, the S&P 500's ETF, the SPY, and I'm showing this with H205 out of the Flair 2 ebook. And if you go back and you look at the earliest videos I did, it says actual trades 1, actual trades 2, 3, and 4. And you will see the phenomenon that I'm about to describe, and it's a very, very powerful event. First off, I did extend those red trend lines out to the right and measure the distance, and I come up with an inflection of the week of June 7th. Now there might be inflections before that, so we don't know that that's a tipping point south. It could be, it has already tipped by then, and that could be a tipping point back north. But inflection week of June 7, if you know how to play inflections, you want to be watching for that. And I do have a video on the site, on my website, orangequant.com, where you can really see how inflections get played. Anyway, with H205, which is Hudson's second order oscillator, you can see the plot, that blue plot there, and it's flat against, kind of almost embedded in that lower red trend line. And actually, I wasn't so much looking for inflections with this as I was trying to establish range. And what's important to notice here, and I'm going to draw a line connecting this last week, this is the SPY weekly, connecting it down to the H205, so you see what I mean. It looks like from that it has a lot of headroom in this range here. And indeed it does, maybe as much as 2 more points, so we could be looking at 123 before this is over. But in my opinion, of even greater importance, and I'm going to kind of circle this here to show you what I mean, of even greater importance is the fact that you can see that that's the top of it, and it's only sitting at the bottom trend line, which means that at some point during this week, and I don't have the historical to look at it, but at some point during this week, that H205 plot dipped below that lower red trend line. And again, going back to those actual trades videos, you'll see the importance of that. It's very dramatically important. In other words, it was a breakdown, okay? And typically, when you look at those earlier videos, when there is one breakdown, it's followed by another that's pretty substantial and powerful. So I'm expecting this, of course, to capitulate pretty soon. Meanwhile, we could lay around this top for who knows how long. I know I said I'm looking at a top of about 120, and that's pretty fairly on the mark. If you look at the quarterly forecast that's available just a few videos back, you'll see that I'm picking the middle ground and extending, going up from there to the next trend line on that video. You'll see that it actually can hit about 123, 124, but that's the extreme, and I didn't really expect the extreme, and at this point I have to say I just don't know whether it's going to hit that extreme or not. Anyway, again, the important point is that at some point this week it broke down below that trend line, and that's a danger sign, and when you see those earlier videos you'll see how powerful that is. Meanwhile, if I were you, I'm just waiting for a clear sign of capitulation. My feeling is be very careful here. You don't want to be Mr. Magoo walking around in a dynamite factory. Not a good idea. So if you're doing options, you want to be 2 or 3 months out, I would think, on your puts, because they can play this for a bit longer. It's only in the next quarter, when you look at that quarterly forecast, that you really begin to drop into safer territory from here. Okay, I'm Dennis Hudson, orangequant.com, with my thumb in my ear, waiting just like you are. Stay with me.